Plug Power is at it again, announcing some seemingly really impressive deals with some big customers, but this could end up really disastrous for investors, and I want to get into why. This is the first announcement here with SK Plug Hiverse. This is a Korean company, and this really just doubles down on Plug Power's investment in forklifts and hydrogen technology for fulfillment centers. So really business as usual here. I wouldn't read a lot into this as an investor. This is just the kind of announcement you would expect them to see on a pretty regular basis. I want to take a quick second to thank this video's sponsor, The Motley Fool. Go to fool.com/Rive to get their top 10 stock picks to buy right now. The more notable announcement was with Amazon. Now, you might remember back to 2016, that's when Amazon actually made a big order for fuel cells from Plug Power. That was part of Amazon trying to get into fuel cells for their fulfillment centers. And that's been something they've been expanding over the last 6 years. So this is really an expansion of that. And I want to get into a couple of details because Amazon is always a big name for Plug Power, but the details really matter here. So you can see that the green hydrogen that Plug Power is going to be supplying, so this would be hydrogen from green sources like solar or wind. They're going to be supplying about 11,000 tons per year of liquid green hydrogen. And that's starting in 2025. So this is a few years off, but a pretty notable number. But this is what's really important here is that Plug has given Amazon warrants to acquire 16 million shares of stock at about $23 per share. Now, this is consistent with what Amazon demanded the last time they made a deal with Plug Power. They got warrants in their 2016 deal. Really tells you where the power dynamics are between these two companies. Plug Power isn't just a normal supplier. This is a supplier that has to literally give Amazon stock as upside just to make a deal with them. Now I think it's worthwhile to go back to 2016 and look at what the financial results were for Plug Power after they made the Amazon deal. And note that they had a deal with Walmart at a similar time as well. So we can look at revenue has really gone up since then, $502 million in revenue in 2021. That's really impressive from $83 million in 2016. But look at that net income line. Plug Power is just burning cash. If you're burning cash to grow your business, where do you get that money from? Well, you sell additional shares. And that's exactly what you see here in the shares outstanding. 182 million shares outstanding at the end of 2016. By the end of 2021, that number was 577 million shares outstanding. Now think about that as an investor. Revenue is up more than 5x since 2016, but shares outstanding are up over 3x. So you're not getting nearly as much benefit as you might think. And in addition to that, the company is losing money. So there's no earnings to be shared with investors. Now, you may say the company is just investing in growth, but I have to wonder where this is going to stop. Plug Power has for a really long time said it was going to be cash flow positive. That just simply hasn't happened. And the company continues to issue shares. And it's really worrisome that it has to issue warrants to a company like Amazon just to get them to assign a hydrogen deal with them. I see this as a continuation of the same story for Plug Power. They're really good at making big, grand announcements. They're really good at growing revenue, but they're just burning cash year after year. They continue to dilute shareholders, and I don't see any end to that in sight. That's why this is just a stock I am going to stay out of. It's too risky for me, and I think there are better options in the hydrogen space.